Hey everyone, in this video we're going to break down the real situation with XRP as of February 4, 2026. Over the last 2 days we've had events that can literally change the game. We're talking about $280 million coming on-chain through Ripple's ecosystem, a major 2-day global community event, and the first serious test for the Clarity Act, a law that could define the future of the entire crypto market. If you're following altcoins, especially XRP, this information is critical. In this video, I'll cover why XRP dropped toward $1.5 despite good news, what actually happened in the last 48 hours, the exact price levels you need to watch, why the XRP Community Day on February 11-12 could change everything, how the Clarity Act is affecting price right now, concrete analyst projections for XRP through the end of February. Let's get into it. Section 1. What's going on with XRP right now? Market cap has slipped below a key psychological zone around $80 billion. Over the last 2 days, this is what happened. Day 1, February 2. The market wakes up with hope. Ripple announces the finalization of a $280 million diamond tokenization project on XRP Ledger. This is not just a number on a screen. These are real, tangible assets, certified cut diamonds from the UAE, now represented and moved on-chain. Companies Billion Diamond and Control Alt move this value to XRPL using Ripple's institutional custody. This is a landmark event. It proves the ledger can handle real financial instruments, not just speculative trading. So what happened to the price? It didn't pump. Why? Reason number 1. 1 billion XRP unlocked. At basically the same time, Ripple unlocked 1 billion XRP from Escrow. Yes, these are the company's own holdings, set up years ago. But here's the issue. Out of that billion, around 300 million XRP are prepared for sale. That means extra supply hits the market right when you need extra demand. The timing is terrible. Strong fundamental news gets canceled out by very real sell-side pressure. Reason number 2, macro headwinds. A lot of people come into crypto expecting it to be uncorrelated with traditional markets. Reality is different. Crypto is deeply tied to macro conditions now. This week, central banks and macro fears are putting pressure on risk assets. Bitcoin is slowly losing momentum, hovering between roughly the high 90K and low 100K zone. When the king of the market hesitates, altcoins get hit even harder. XRP moved down about 1-2% in this 48-hour window, but the problem is not the percentage itself. The problem is the psychology. Traders were hoping for a clean bounce off 1.5. Instead, they got a weak consolidation below key resistance. Critical support and resistance levels. Right now, these are the levels that matter. $1.69, $1.71, first major support. A clean break below opens a path to $1.46, $1.46, second line of defense. Losing this exposes the 1.24 zone, $1.24, the recent local bottom from late January. On the upside, $1.82, first resistance that needs to be reclaimed for a serious rebound. $1.97, strong resistance. A breakout above unlocks a move toward the 2.15 region. So we are in a critical zone. One bad catalyst and XRP can easily lose another 10-15%. One strong positive trigger, and the same move can happen to the upside. Section 2. The $280 million diamond tokenization deal. Let's go back to the diamond project, because this is actually a big deal that many people are underestimating. Why is this important? First, this is real-world utility for XRP Ledger, not just speculative trading. No one tokenizes diamonds for fun. Behind this, you have a multi-billion-dollar global diamond industry. Second, It's a trust signal. When you place $280 million worth of high-value physical assets onto a blockchain, you are effectively saying, we trust this infrastructure more than the legacy system. How it works? In simple terms, here's the basic process. Physical diamonds are stored in Ripple-connected custody in the UAE, for example, Dubai. Each diamond is independently certified and appraised. A token is created on XRP Ledger that represents that specific diamond. Tokens are held in secure, institutional-grade custody managed via Ripple's infrastructure. Traders can buy and sell these tokens on secondary markets without moving the physical stones. This solves one of the biggest problems in the diamond market: liquidity. Before, to sell a diamond, you had to find a buyer or go through auction houses, wait for settlement, physically ship the stone, reissue or verify certificates. That takes weeks or months. On-chain, it can take seconds. The scale, $280 million, is not just a big round number. It's 1 billion AED. That's comparable to the market cap of a mid-tier altcoin in the top 50. If this model scales, on-chain volumes for tokenized real-world assets on XRPL can grow by multiples. There is one important nuance, though. The project is still awaiting full regulatory approval from the Dubai Virtual Asset Regulator for secondary market rollout. That means the maximum impact of this initiative hasn't even hit the market yet. When secondary trading fully opens, it can become a strong medium-term bullish driver. So why didn't price pump? That's the main question everyone asks. Huge, historic news. And price dips. Why? 3 main reasons. Smart money was early. The rumor of a large tokenization deal was circulating well before the official announcement. By the time it was public, early entrants were already in profitable positions. Classic rule: buy the rumor, sell the news. Once the news is confirmed, short-term traders often start taking profits. The escrow unlock and macro pressure hit at the same time. So the market got a bullish narrative, plus extra sell supply, plus negative macro, a perfect storm for short-term weakness. Section 3. The 1 billion XRP escrow release. Let's break down the escrow release, because it's frequently misunderstood. Quick history of XRP escrow. Back in 2013, Ripple locked 55 billion XRP into escrow to avoid flooding the market and to give the project time to grow. The plan was to release roughly 1 billion XRP per month over many years. Today, most of that has already been cycled through. Each month, when an escrow tranche expires, the market gets tested again. What happened this month? This month's unlock, 1 billion XRP came out of escrow. Around 700 million are typically relocked into new escrow contracts. Around 300 million are made available for sale to cover operating expenses, investments, development, etc. This is normal. Ripple has employees, offices, R&D teams, marketing and ecosystem investments. They fund all this partly with XRP. Impact on price. Let's put it into context. 300 million XRP at current prices is roughly $480 million. Daily trading volume of XRP across all exchanges is in the multi-billion-dollar range. Those 300 million are not market sold in one day. They're usually distributed over time. So yes, it adds sell pressure. But we're talking about something like an extra few percent of daily volume spread out over multiple sessions. Noticeable, but not apocalyptic. The real issue this time was the combo. Fundamental good news plus scheduled unlock plus weak macro backdrop. On their own, each factor is manageable. Together, they produce the choppy, frustrating price action we're seeing now. Section 4. XRP Community Day 11. 12 February. A potential catalyst. Now let's move to what might become the key short-term catalyst. XRP Community Day 2026. What is this event? This is a major global virtual event organized by Ripple, spread across 2 days and multiple time zones. February 11, sessions for EMEA, Europe, Middle East, Africa, and the Americas. February 12, sessions focused on APAC, Asia Pacific. It will run via live audio events on X Spaces, so the whole community can listen in real time. Who is speaking? This isn't just a community hangout. It's a lineup of top decision makers. Brad Garlinghouse, CEO of Ripple. Macro view of where XRP fits into global capital markets. Monica Long, president of Ripple. Strategy, execution, and priorities for 2026. David Schwartz, CTO. Technical direction, XRPL adoption, and the future of the protocol. Stu Alderity, Chief Legal Officer. Legal and regulatory landscape, including what's next after the SEC battles. His comments often move the market. Ecosystem leaders, including representatives from firms like Grayscale and Bitnomial, which connect XRP with institutional products like ETFs and derivatives. Topics that are expected. From the agenda and public comments, we can expect discussions on regulated financial products, ETFs, how XRP fits into spot ETFs and other institutional structures. Wrapped XRP, cross-chain integrations, such as WXRP on chains like Solana, expanding use in DeFi ecosystems. DeFi on XRPL, the shift from a purely payments-focused chain to one with DeFi infrastructure. Tokenization, following the Diamond deal, what other real-world assets might move onto XRPL? Why this matters for price. XRP Community Day is the first big opportunity in a while for investors to hear Ripple's roadmap directly. Any major announcement, a big banking partnership, new institutional products, regulatory breakthroughs, or tech upgrades can become an immediate driver for speculative flows. February 11, 12 should be marked in red on any XRP trader's calendar. Even a moderately bullish event can be enough to push price 5-10% higher in the days that follow. Psychological importance. It's also the first major flagship event after Ripple's long legal conflict with the SEC. It sends a message. The company is back on offense, confident, and focusing on building. Section 5. The Clarity Act and the Future of Regulation. Now we move to what matters the most for long-term XRP investors. The Clarity Act, brief history. In July 2025, the U.S. House of Representatives voted on the Clarity Act, often described as a comprehensive crypto regulatory clarity bill. The result was 294 yes versus 134 no, a very strong bipartisan approval. This was one of the rare moments where both Republicans and Democrats aligned on a crypto-related initiative. Status as of February 2026. Right now, the bill is in the Senate, undergoing discussions, amendments, and political bargaining. There's a twist. Coinbase, which originally supported the idea of regulatory clarity, later pulled its support for the current version of the bill and criticized certain provisions. In response, there were signals from the White House that support for the bill might be reconsidered if major industry players push back too hard. On prediction markets, the probability of the Clarity Act passing in some form still sits around the 75-80% range, high but lower than it was right after the House vote. What the Clarity Act actually does. Let's simplify the main points. Gives the CFTC primary authority over spot crypto commodity markets. This means the Commodity Futures Trading Commission would have clear say over assets treated as commodities, like Bitcoin is today. This is generally positive for large, established crypto assets. Keeps the SEC in charge of securities, investment contracts. The SEC would remain the regulator for tokens that function as investment contracts or securities. That's bad news for sketchy pseudo-equity tokens, but good news for projects that can pass out of that category. creates a clear registration framework for exchanges, brokers, and dealers. Think of it as bringing crypto trading venues into a more formal regulatory perimeter, with stricter KYC, AML, transparency, and consumer protections. Includes protections for developers and open source networks. It makes it harder to prosecute core protocol developers for actions of third-party users. That's huge for innovation and open networks. There are dozens of amendments on the table, touching DeFi regulation, stablecoins, reporting obligations, and cross-border coordination. Why this is critical for XRP. Here's how clarity directly affects XRP. Factor 1. Legal certainty. Right now, there is still residual uncertainty. The SEC already lost most of its case against Ripple, and multiple court findings have recognized XRP in certain contexts as not a security. However, as long as the framework is not fully codified, there's lingering regulatory overhang. If the Clarity Act passes with language that recognizes tokens like XRP as digital commodities and secondary trading, it shuts down the "is XRP a security?" debate for good. That's exactly what large funds and institutions want to see. Factor 2. Spot XRP ETFs as an anchor. Spot XRP ETFs have already been approved in several jurisdictions, and in the US, we've seen the green light for certain products referencing XRP. The existence of these instruments is already a legal anchor. The SEC would not normally allow a spot ETF on something it firmly considers an unregistered security. The Clarity Act would formalize this landscape and anchor that status in statutory law, making XRP substantially safer for big institutional capital. Factor 3. Risk if the bill fails. On the flip side, if the Clarity Act were to fail in the Senate, markets would react. For XRP, which is heavily tied to the legal narrative, that would be a clear negative. It wouldn't automatically reclassify XRP as a security, but it would extend the period of regulatory uncertainty, and uncertainty is bad for risk assets. Likely timeline and impact. Base case expectations look like this. Probability of some version passing, around 75–80%. Time window, April–June 2026. Potential price impact if it passes, plus 15–25% within a week after a clear positive vote or signing headline. Section 6. Concrete price scenarios for February 2026. Let's talk numbers. Where can XRP realistically go in the remaining weeks of February? Base case, around 60% probability, $2.1 to $2.25 by February 28. This is the most realistic scenario. The logic, XRP manages to hold the 1.6, 91.7, support area over the next days. XRP Community Day on February 11/12 provides a moderate positive catalyst, plus 3–5%. Bitcoin stabilizes and trades comfortably above the key psychological zones. Spot ETF flows into XRP products return to a healthy level, for example, tens or hundreds of millions per week. By the end of the month, XRP reaches the $2.12–2.25 range. The central target in this band is $2.15, which implies roughly a 35% move from the 1.59 area. Bullish case, about 25% probability, $2.4, $2.45. This scenario requires multiple strong bullish catalysts stacking. XRP Community Day delivers one or more mega announcements, a major new partner, product, or tech launch. Headlines around the Clarity Act turn clearly positive. For example, strong bipartisan support in the Senate. Overall crypto market gets a macro tailwind, like a dovish central bank signal or a major institutional endorsement. XRP ETF inflows accelerate significantly. In that environment, XRP can break 1.97, flip it to support, and push into the 2.4 zone. That's over 50% above current levels. Bearish case, about 15% probability, 1.8, $1.9 ceiling. In the disappointing but not catastrophic case, Community Day is underwhelming, interesting, but nothing game-changing. Macro conditions worsen. Hawkish central bank rhetoric. Risk-off in markets. ETF flows stagnate or turn slightly negative. Bitcoin corrects harder, pulling large caps and majors down. Here, XRP might struggle to hold above 1.69, chop around and end the month stuck below $2, likely in a wide 1.8, 1.9 channel. Extreme bearish tail risk, about 5% probability, clean break below 1.5. This is the crisis scenario, and it requires significant negative shocks. New aggressive legal action from the SEC or other regulator. Clarity Act fails dramatically or gets shelved. A deep, systemic risk event in global markets, major risk-off cascade in crypto. In that case, XRP can revisit 1.24 or even print new local lows. Historical February context. Historically, February has not been an easy month for XRP. Median February returns across years, negative single digits. In February 2025, XRP dropped almost 30%. Other years were mixed, some slightly positive, some flat. That means the statistics are against a huge, effortless pump. To beat historical tendencies, the asset needs real catalysts. Exactly what we're watching now. Community Day and regulatory news. Section 7. Key levels in trading strategy. For active traders, here's a clean map of levels. Support levels. Bottom up, $1.24. Recent local bottom, extreme support, $1.46. Secondary support zone, 1.6, 1.65. Important consolidation area, 1.69, 1.71. Immediate, critical support right now. Resistance levels bottom up, $1.82. First, local resistance, $1.97. Strong resistance, $2.15. Base case target, $2.4, $2.45. Bull case target zone. Tactics by trader type. Day traders. Look for bounces off the 1.69 support area with profit targets around 1.82. Avoid holding large positions overnight into major event days like Community Day. Keep tight stop losses slightly below 1.65. Swing traders holding days to weeks. Wait until after Community Day when volatility calms down. Enter on pullbacks to the 1.7, 1.8 region if the trend is turning up. First take profit zone, 2.1. Typical holding period, 5-10 days. Position traders, investors, core entries should already be scaled in around 1.5, 1.6. Add-on dips toward 1.65, 1.7. If the fundamental thesis is intact, medium-term target 2.4, 2.5 over the next 2-3 months. Hard stop area, somewhere below 1.3, under the recent extreme lows. Risk management. Never risk more than 1-2% of your total capital on a single trade. XRP is volatile. Emotions and leverage are what usually wipe people out, not the asset itself. Use clear invalidation levels. Section 8. The big picture and takeaways. Let's put all the pieces together. What we know, XRP is in a critical zone, around $1.5, $9. It is sitting between a recovery structure and a deeper correction path. Fundamentals are strong. Real-world tokenization diamonds, a major upcoming Community Day, and a realistic path to regulatory clarity through the Clarity Act all support the long-term story. Technical picture is shaky. Price is still fighting to reclaim key resistance. and macro conditions are not ideal. Sentiment is cautious. Many traders are simply waiting for clearer signals from the February events and from Washington. Likely February timeline. Here's one reasonable roadmap. Week 1, Feb 4-8. Choppy consolidation between 1.65 and 1.82 as traders position ahead of Community Day. Week 2, Feb 11-15. Community Day injects volatility and likely a bullish impulse of 3-8%. Price tests 1.92. Week 3, Feb 18-22. Profit taking, then another push if regulatory headlines are supportive. Price gravitates toward 2.05, 2.15. Week 4, Feb 25-28. Consolidation around the base case target zone of 2.1, 2.15. Investor takeaway. If you're a long-term investor with a 1-year or longer horizon, the 1.5-1.75 range is an attractive risk-reward area. The long-term thesis is based on growing real-world utility, tokenization, payments, DeFi, increasing institutional participation through ETFs and custody solutions, progress toward regulatory clarity, Clarity Act, post-SEC legal status. If you're a short-term trader, February is all about respecting support at 1.69, watching Community Day and Clarity headlines, being ready for fast moves both up and down, closing. So, XRP as of February 4, 2026 is standing at a crossroads. On one side, you have strong fundamental news, like the $280 million Diamond tokenization deal, and major upcoming events. On the other side, you have macro headwinds and scheduled supply unlocks weighing on the chart. 1 week from now, we'll have XRP Community Day. A few months from now, we may have a decisive moment on the Clarity Act. Both will shape the medium-term future of XRP.